what if you, as entrepreneur, could have your financial performance in advance? My name is Paulino Silva, and I'm here not to talk about premonitions, but about a very important management accounting tool, the budget. Yes, I'm going to talk about the future because the budget is a perspective tool. So, the first step, you need to know how many units you are going to sell, and of course, the selling price. For that, you need a market study, and you also need the help of your marketing team. So, you can smile because you can, with this information, have your sales budget. So, you just need to multiply the units to sell by the sales price. And this is a smiling face because the sales are the most important profit. But we need to consider our costs. Yeah, it's a bad face now. Oh, we need to go with the costs. So what are the costs that we need to consider? So the first one is the cost of sales. And for that, we need to know the beginning inventory and also the ending inventory. So the variation of inventories is very important. So we need to know how many units we are going to buy, what is the purchasing price, and with the variation of inventories, we can have the information about the number of units to buy. So with this, with the units to buy and the purchasing price, it's also possible to have the purchasing budget. So you need to multiply one by the other. So with this information, it's possible to have the cost of sales. So the cost of sales is just multiplying the units to sell by the unit cost that depends on the purchasing price and the beginning inventory. So the gross profit is possible to have now. So you only need to subtract to sales the cost of sales. But the gross profit can be very tricky. Look at these numbers from a financial report of Farfetch. Farfetch is a very large company. It's an unicorn, so it sells a lot of $1 million, as you can see in these numbers. So the gross profit here is more than $700,000, but the loss before tax is over $3 billion. So that's a problem here, as you can see. We have other costs. So let's look at what are the other costs. So the other costs can be, let's say, commercial costs, administrative costs, financial costs, just to mention the most important ones. So commercial costs can be, for instance, the marketing expenses, the salesman commissions, the commercial vehicles expenses, and also the transportation of products for customers. So administrative costs can be management costs, management salaries, office expenses, legal services, and also accounting services. And of course, we have also financial costs. When you are an entrepreneur, you need to finance your business. So you need to have interests on borrowings. You have also leasing expenses and also factoring expenses. So with this information, it's possible to calculate profit before tax. And what you do is just subtracting all these costs that I mentioned to gross profit. So you have the profit before tax. But of course, for the money that you keep in your pockets, you need to know the net profit. But the net profit is possible to calculate subtracting the taxes to the profit before tax. Of course, in every country, there is a taxation system that is different. So it's possible that it's not only a question of multiplying the tax rate by the profit before tax. So, but once you have your tax estimated, it's possible to have your net profit. So, of course, for having the best decisions, of course, you need the best management accounting tools, but you decide. Thank you very much.